Placing your own trade online might seem overwhelming as the price can change with every second that ticks by. That's why we're going to walk you through the ETF trade ticket to get you familiarized with the choices you'll have to make. Learn at your own pace without the pressure of trying to place a trade at the same time. If you clicked on the Buy button from one of the research tools or product pages, then the action is already set to buy, and the ETF symbol is already entered for you. If you access the trade ticket a different way, you'll have to make those selections. On the far right-hand side, you'll see the price per share from the last trade. You'll also see some additional information about how the ETF is trading, like the bid, ask, and volume. First, enter the number of shares you want to buy in the quantity field. This is different from a mutual fund trade ticket. There, you can choose the dollar amount you want to spend. The next choice is price type, and the most common ones are market or limit. A market order means you want to buy the ETF at the next available price after you submit the order. This will buy you the shares as fast as possible, but you won't know exactly how much each share will cost or what the total of the trade will be. A limit order allows you to determine the most you're willing to pay per share. This is the amount you'll enter in the limit price field. However, if your limit price remains below the ETF price while your order is open, you won't buy any shares and the order will eventually expire. To learn more about market and limit orders, as well as other types we didn't cover, watch our videos on order types. You can also click on the question mark icon located in the top right for written help as well. The next selection is the good till field. For market orders, this is usually left at day. For limit orders, you can choose from the following three choices. Day. Your order remains open until the end of the trading session. This means if the market is not open the day you place an order, then it expires at the end of the next trading session. Cancel, also called a good till canceled or GTC order. A GTC order can be open for a maximum of 90 days for ETFs that trade in Canada and 180 days for ETFs that trade in the US. Specify. This lets you choose exactly how long your order is open for up to the maximums we just described. When selling an ETF, the selection choices are the exact same. Whether you're buying or selling, make sure you're aware of the commissions that your broker may charge. Knowing this may impact how often you place a trade and which ETFs you choose to invest in. That's all there is to it. Now you're ready to start placing trades yourself. But being a self-directed investor doesn't mean you always have to do things on your own. If you need help, a TD investment representative is available by phone to assist. Have more questions? Check out the links to the right and in the description below.